Hi. Good evening, guys. Welcome back. So today we have our full squad, full team for today's live. Yet another tech company. This company is a bit special compared to the previous companies that we talked about. So previous companies were more, I would say, more 5G, more semiconductor, more towards user base. But this one, it's solar energy proxy. So let's wait for the crowd to come in before we start. But maybe we just ask you guys in the comments section, the audience, do you guys know about Greatech? When do you know about it? What does it do? Are you an investor? And what are the benefits do you see in this company, and what are the weaknesses? But before that, maybe we can bounce around. Sean, have you come across this company, and what is your impression about this company?
Yeah, before this, I think, no, it's not a very popular company in Bursa. I don't think a lot of people know about it. But if you dive a bit deeper, actually, they are quite interesting. They've got a few different businesses, but I don't know if I'm right to say, to summarize, but they are a company that provides automation services to different industries. Yeah, but I think more towards the solar energy production industry.
Yeah. Junbing, any impressions about this company?
I think for me myself, of course, I don't think I heard of them until we decided to study this company. But then what bring to my attention is I think within this COVID-19 pandemic season, they are one of the few guys that managed to pull out quite a good result, I would say. And then if you compare with the remaining tech stock, if you claim those companies are tech stock, this company actually performed quite well despite all these pandemics. That's why it brought into our attention. And then when I first checked out their website, before I zoom into the annual reports, I was like, wow, these guys do so many things because their homepage, if you guys visit their homepage, they got like so many different images on different industry. But ultimately, they only offer one thing. They are all into this thing called automations. So I think this can summarize what they did. But then, of course, we can dive a little bit deeper.
Okay, yeah. I think Greatech has been a company that over the weeks when we do our Not So Late Night show, there are a few people who are keep commenting about Greatech, and every time we see people comment on Greatech, we see, okay, let's do something about it. And then every time we go to the website, we see, wow, so complicated. And it really took us some time to really set our minds and say, okay, fine, let's just get this off the to-do list, of the checklist, and let's make a Greatech the company to discuss and share in today's Not So Late Night show. So yeah, one of the painful companies to study, I would say, of all the companies compared previously.
Yeah.
So shall we proceed already, Ming?
Yeah, I think so.
Okay, so as usual, this is going to be a sharing session. We hope it will be educational, beneficial to you guys. Do not take it as any buy or sell call. So, what does Greatech do? If you were to go to their website, this is basically what you will see. Basically, we just snapshot the link. But if you look and zoom deeper, basically they say, okay, I'll do automation solutions to a lot of industries. And the industries include solar industry, electronical devices, semiconductor, life sciences, energy storage, and glass substrate. So very superficial for laymen like you and me who are not in the engineering background. So after we just dip deeper and try to understand, basically they help to make machines that have the automation purposes, and these machines are used in these few categories that they highlighted lah. So basically, they make machines for factory. And these factories can be in the semiconductor line, it can be in the solar line, it can be in electronics, life sciences, energy, and glass substrate. So if you think back, it makes sense because at the end of the day, factory is turn something from A to B to C and to D. So if you have a very good set of machines, you know how to make machines pretty well. Basically, these machines, the same theory can be used to replicate and make machines for different industry lah. So to put it in a very simple manner, or more simple to understand rather than looking at dates, which can be intimidating lah. Chun Beng, anything to top up?
No, I think we can move to the next slide.
Yeah. So when we talk about making machines, machines is not just one machine. If you ever visited any factory or you are working in a factory, you know machines is a combination of few machines. So only you make up your production line. So machine A, once it finishes its job, it passes to machine B, and once machine B finishes its job, it passes to machine C until maybe E, F, G. Then only you get your final product. So Chun Beng, would you like to bring us through what does production line systems and single automated equipment means when we look into their revenue?
So if you make your time to actually study about this business, basically you only look into these few things. Production line systems and single automated equipment is the two terms that keep on appearing in their annual reports. So what does it really means that basically they do machine to support all the factory. Single automated equipment basically is single purpose one. For example, the last few companies that we have covered, those have doing the wafer. Let's say you want to cut the wafer lah. So they do a very specialized, customized machine for you to cut the wafer. Just one thing. So this is a very small part of thing that build up, I think, 5 to 10% of the revenue for Greatech. But what makes Greatech different is they are into this production line system. Basically, they cover, let's say, 10 to 15 different machines. They built into a cycles. So, for example, if you wanted to, let's say, take a place for you to make roti canai as an example lah. If you want to make roti canai, there are a couple of things you need to prepare. And then for you to make roti canai, beside the manual workers, a lot of things you can try to automate it. Let's say you can do a machine keep on flipping the stuff. So some of the company that bought the machine from Greatech is they are only buying the machine that flip the roti canai, for example. But then when we talk about production line system, is beside the flipping, the pouring the oil, all those things, is all one complete set to help you do the production. So this production line system actually build up majority of the revenue contribution to this company. But then if you go into the next, but I think before we go into the next slide, the last one, the light green color is actually provision of parts and services. So basically, besides selling machine, you also sell the maintenance services, upgrade of the parts. If there's any issue, you go and support. So this is also a part that we see a good sign because you can see their portion becoming bigger if you compare from 2018 to 2019, which is 1 year after they get listed. This is a good sign because this is a recurring stuff. If this size of cake get bigger, it's good news for the investor like us lah. Maybe you can move to the next slide.
Okay, yeah. So yeah.
This is the example of the production line system for solar industry lah. But of course, we won't go into details because it's very, very details on how you actually make the entire stuff. But if you can see things like auto labeling system also part of it. So when they claim that they are the production line system, they cover every single things. So that this company buy this stuff, they can just throw the thing in and then this will build the entire stuff. Of course, with some intervention from humans lah. But then this system alone can support the entire production. So that's why when you see the whole thing, the thing that you can take a note, take a deeper look is auto labeling system lah. Basically, this also cover into part of the system. So, but then if you compare to the revenue percentage that we have shared in the previous slide, then you think, wow, how many systems that they did? But unfortunately, if you go to the next slide, Greatech only produces production line system mainly to support one industry, which is solar industry. And the sad part is only one major company. So that they are not supporting the solar industry, but they are supporting First Solar, which is a company in US. And what they did is they have about 10 years plus working relationship with them, and then they grow with this company. I think before they get listed, they are a very small manufacturing company until I think 2017 and 2018, I forget the exact years, they get a very big order from these guys. So make them jump, like the revenue shoot up a lot. Like in the point two that we got put, it grew from 21 millions from FY15, go to 220 in FY18, mainly due to this company have a upgrade cycles, which is, they call it the Series 4 to Series 6. But what it doesn't really means for Greatech is, for them to upgrade from Series 4 to Series 6, they deployed the machine built by Greatech to improve the efficiency of it. So basically, the yellow boxes is entire life cycle, but then what Greatech really involved in is the part that you actually produces the solar cell and then form it into solar module. So this is what bring the 100 to 200 million revenue to Greatech, basically contributed by First Solar, which is resident in Malaysia, Vietnam, and US. They got different factories, and then mainly the reason they are upgrading from Series 4 to Series 6. Yep. So also something to add, because solar company, if you guys are from the industry, they will say, wow, there will be a lot of China player, for example. And you're true, if you have looked into the entire industry, China actually contributed a majority of the volume. But of course, what First Solar try to differentiate themselves is really on the solar cell technology. While everyone or most of the player go with these crystalline technologies, the solar cell technologies, which is supposed to be higher efficiency, but of course it's slightly more expensive. But this First Solar, they go with thin film. So if you see the image up there, thin film basically, because the efficiency is low, so when you deploy thin film to make up the same energy contribution, where you can convert the solar into energies, you need large amount of areas. But why this First Solar go into this area? This is my personal opinion. I think because they are US based, they are producing the solar cell to support the US country, where US supposed to have a lot of desert, hot, and so on. So one of the benefit where thin film can do while crystalline cannot do, although the efficiency is higher, is thin film can tolerate with extreme heat. Desert or whatnot, they can last. And then how they make it differently is some of the trick that they make into this thin film. Although in general, normal manufacturing company which produces thin film supposed to be only ranging from 6 to 12%. But then this First Solar can do it differently. So I think you can go to the next slide. It's quite technical. So basically what it does is basically they have a patented technology called CDTE. But then I won't go into details. Basically, this is their patented technology where they can have a way to absorb, have the maximum exposure of sunlight and then absorbing and turning it into energies. So although thin film is claimed to be lesser effective if you compare to the different technology, but First Solar have this patented technology that can help you to make it more cost effective because they can absorb more light rather than you cannot absorb more light, but you deploy to a lot of places. So this make First Solar special in terms of technology. But then when we talk about Greatech, first thing you will think is they are the proxy of First Solar. First Solar do great, they also will be the Greatech. If not, they'll be lousy, in my opinion. But then one thing that worries also, so if you zoom into the past few year performance of First Solar, you can see from the graph lah, it's like V-shaped all around again. So you go at top of I think 2017 they drop, but then go back up at 2018, then go back down. But then these are some of the things that we managed to observe lah. But of course, this is just for solar performance. Later we'll just tell you what is the other plan that Greatech will cover, and then besides for solar, what is their plan to diversify their portfolios. Okay, I think maybe this one, Jupan, you want to cover?
Okay, so I think, yeah, thanks, Jubing, for just briefly condensing the solar industry, the technology, crystalline and thin film differences, and how does First Solar find its niche in the very competitive solar market, and how is Greatech actually growing with First Solar becoming one of its major customer. Of course, solar energy is one of the most promising energy. Even the Tesla, the so-called autonomous, the electric car that listed in US is also relying heavily on sunlight generated electricity to power vehicles. And to be very honest, logically speaking, one day, we don't know when, but petroleum will definitely run dry. We will definitely run out of gas. Solar is the only way forward, maybe 100 or 200 years down the road, if human civilization can still continue. So definitely solar will have its part to play, and a very important part to play in the future. And of course, going into solar now could be a very good thing. But of course, being too heavily reliant on just one client or customer is a big risk. But so once we zoom down into Greatech's geographical breakdown, you can see that they supply to a lot of customers in many countries: India, Ireland, Malaysia, China, Philippines, Singapore, Switzerland, US, and also Vietnam. But if you were to just zoom in a little bit closer, if you never zoom in, you will see that, okay, very much diverse geographically. But when you zoom in deeper, you see that the major chunk of the revenue coming from Malaysia, coming from US, and also coming from Vietnam is contributed by this company called First Solar. So First Solar has plants in Malaysia. They also have companies in the US and also Vietnam. And when First Solar wanted to upgrade their systems from Series 6, Series 4 to Series 6, they found Greatech, and they believe that Greatech will be able to do a great job. And because First Solar themselves is also quite a big company, so majority of these upgrading works went to company called Greatech. And you see that's why the revenue jump, especially from the US and also Vietnam and Malaysia side. So of course, the risk is there that once First Solar finish upgrading their plants, what will be the next growth story for a company like Greatech to continue growing, right? So this is the thing that if you want to invest in this company, you need to find out. So First Solar is not an old company. It just got IPO recently only, and this is what we found out in the IPO prospectus. Basically, when you do IPO, you raise money from public. You must have a plan on how you want to utilize the money. If the money is not well utilized or well planned, then of course people will not subscribe to your IPO. Chun Bing, what strikes your mind first when you look at the IPO allocation of a Greatech when we venture into the IPO prospectus?
Yeah, I think what you really, if you check out their IPO documents, this is one of the things that you can find out. But of course, this taken from the annual report after 1 year. They have been listed in the markets. So I think the biggest figure should be 36, the figures, 36,000, the figures. And then if you look to the right, it's actually working capitals. So it's very, very weird. Company get listed to raise fund for working capitals. The first thing that struck our mind when we see this is 50% for working capital, there must be something wrong. Either they don't have cash, they need to pay back debt or whatnot. But when we zoom in further down, they are quite loaded in cash. Basically, they are having a lot of cash to debt. The cash portion is much higher. And then we start to think why this guy wanted to raise working capitals that much. Then we try to find out our answers. Is it because of they have a lot of receivable? Maybe their payment term is 5 years, for example. That's why they need this to run the companies. And then when we look into it, also not their receivable is not that bad. So this become a question mark to us until today, I believe. If you guys have some insight, maybe you can share with us. But we will be more glad to see if they put more allocation into R&D or expansions, because that one is really the thing that can bring in values. Working capital is just something fishy. Maybe this guy thinks someday they will run into trouble. This cash can help them. But of course now the proposed one is 36, but then actual utilization only 40% of it. Still fine. They didn't try to cash out very quickly in the first year. So we should monitor this part with something that until today we still cannot crack our head why this is happening. But the rest is quite common. You got capex, and then you got R&D expenditure. All this thing is good. It just the other good part also, they only take a very small portion to go for repayments. So they didn't raise fund to pay debt. But the weird part is they raise fund to keep it as a working cash so that they can manage something in the future with something that I don't understand until now. Maybe you guys have any thoughts?
Maybe Sean, what are your opinions or thoughts if a company has so much portion of IPO funds kept as working capital?
Yeah, I'm not very familiar with that industry, right? But all these kind of project takes a really long time. So a lot of time customers wouldn't pay the full payment, right? So it will always be progressive payments. So assuming it's over a period of 12 months, 24 months, Greatech has to come up with a lot of money first, to build the automation system, and they'll get paid progressively. So yeah, maybe that's one of the reasons.
Yeah. I think that's a very good point to raise up. You see, even though that they just IPO not so long, but within 1 year, I think they IPO in 2018. Within 1 year, they have already utilized around 40% of their working capital. Of course, granted that if business, they have new projects will also generate more money. But as you said quite accurately, when you want to produce a production line or production system, it consists of a few machines, maybe 10, maybe 20, or maybe more than that. And to make a machine, you need time. For me personally, if I am still in the so-called company where we also actively buy machines, the lead time for a machine is always 6 months, 12 months, or sometimes even more. And during these 12 months, the company has to pay out salaries to our workers as well. So I guess that's where the working capital comes in handy for a company that makes machineries and also a production line system for other companies as well. So yeah, that's maybe where.
One more point that maybe is caught my attention is the R&D expenditure, right? Because they only allocated 5 million there, but with almost 98% of business coming from one customer, you would probably expect that they will do a bit more R&D to, venture into other of the different categories that they mentioned, like life sciences or medical, for instance.
Yeah. Well, I think this is still a very new company, and I think we can continue to monitor the company to see whether the management is more prudent and more cautious when it comes to allocating their funds. So every time they use their funds, you get captured in the annual report, and as shareholders or potential investors, it is our due diligence to actually check and monitor the management to see whether they walk the talk or not now that the money is in their hands. So I think Chun Bing, you really pointed out ever since First Solar got managed to give up a major part of their upgradings to Greatech. The company has been growing, but I think the growth part or difference happened before Greatech went public, and this is the so-called snapshot of their quarterly earnings after the Greatech earnings got factored in. So you might not see the major jump or the drastic jump, but this is already when Greatech, First Solar contributed to Greatech's revenue and low profit. But if you were to split everything and look at it quarterly, you will notice that of course, yes, it's still a very good business, 20+% net profit margin. But one thing that really bothers me a bit is flat for Q1, Q2, Q3, Q4, Q1, Q2. Well, that's just my opinion, but don't know what do you think about it, Junbei? For a company that just newly IPO'd, but for a few successive quarters, it's hovering around 58%, 58 million, 51 million kind of revenue.
Because if you zoom into how they got started, it's because they get major contract from First Solar, and then the revenue already jumped before they actually got listed. The worrying part, if you check the 2018 versus 2019, the major one is if you compare the regional breakdown that we shared previously, you see US 1 year is very high, 1 year is lower. While Vietnam also same, but it's on the vice versa orientation, meaning when US high, but Vietnam is low. When Vietnam is low, US is high. What does it mean is it because of the Series 6 upgrade take place based on regional expansion? But of course, we cannot see much from Malaysia because Malaysia plant should be much smaller. The key thing that strike me is US already spiked, Vietnam also spiked, and First Solar only got their plant in these two countries plus Malaysia, but Malaysia's scale is much smaller. Where is the fourth place for them to spike in terms of revenues? So this is something that if you think right now you are looking it, as in you have a lot of confidence on it, because if you compare PE or PE to growth ratio, it seems to be okay because it has been picking up. Maybe we should take a step back and rethink, because for me, I won't enter now unless the next few quarter there is another region or another place that take off. Else, this may be the peak already unless they break through in another areas. But I think for First Solar, every company got different capex cycle. First Solar cannot be keep on spending since 2017 or late 2017 until now. It can be different capex cycle for different plan in specific country, but Vietnam done, US done, Malaysia relatively small, which is where is the next lah. So I really have doubt on this, although it has been performing very, very well. But for me personally, I think it's quite risky if you compare historical result and you try to justify your investment into it. This is my personal thoughts lah.
Okay, Sean, what about you? For growth company that just IPO, and this is the so-called past historical results.
Yeah, no, I think I share the same view as Chun Bing. Again, 2019 total revenue is 215 million. 212 comes from First Solar, so it's really very binary, right? So instead of looking at the annual report for Greatech, maybe you should just look directly into the annual report for First Solar for this instance to know what direction they're heading to.
Yeah. I mean, granted that the profit margin has been improving ever since Q1 2019, 21.4% until as of latest few quarters is going up to 30+%. And if you were to read the latest quarterly reports, they also justified that the improved margins come from better operating efficiencies. So of course, when things get efficient, they can make machines with a lower cost. So it's a justifiable improvement. But at the end of the day, if your company wants to grow, wants to earn more, the revenue has to be main talking point, the key key performing index if you want to buy a growth company that can continue growing. So of course, yes, past few quarters fantastic, but for growth company you have to focus more on the future. How are they going to get better sales, get more sales, and then on the same time also improving their margins? Only then you will get the higher share price to reflect the higher company sales and performance. So next we go into the balance sheet. And I think this balance sheet also really echoes what Chun Ping shared just now. The company has relatively little debt. I think you look at here, the debt is, as of the Q2, is just 22 million. And cash on hand is 190 million. Straight away, they can just pay off the debt and they will still have 170 million, which is roughly around 50% of their total assets. So they're holding a lot of cash. And you can see that the assets actually spike up because funds from IPO, and I think they also partially also come from their funds that they utilize from the IPO to grow their business. So it's quite healthy, and also total equity has been going up because the business has been a cash generating business. Basically got business, got profit, and then the cash go into their bank account. So total equities of which is retained earnings also contributed to the total equity growth, and the cash on hand also gets improved as well. So quite straightforward and actually a very nice looking balance sheet. So next we go to the cash flow statement or the trends for the past few years. You see, if they report higher earnings, definitely operating cash flow will go up. It means that they received their money. It's not just reported on accrual basis on accounting standards. Cash is really going into the bank account, and then they dole out their investments as investing cash flows as well. And you can see financing wise, 2019, 80 million pop straight away positive is because this is the amount that they got during the IPO. It means if you are IPO subscriber, yeah, you're contributing to that portion of that 80.79 million. So this 80.79 million will definitely be hopefully used prudently by the management to further grow the company, be it to do more R&D, be it to come up with more machineries, improving their current systems, and to actually get more customers. Chun Ping, anything you want to add on or top up?
I think the data point is too little for us to see because what they really did is they got listed at 2018, I think it's somewhere around June. It's just 1 year after, 1 year plus, but of course the stat that we put, most of the stats come from 2019 as of FY 2019. 2020 still ongoing. We didn't zoom into the quarterly beside the income statement that we shared just now. It looked very good. I mean, so many orders still coming in, asset building up, but it's too hard to judge. Of course, the exciting story I think has been happened starting FY 15, zoom to FY 18. But then those was not here because at the time it wasn't even listed.
Sean, anything you want to add up?
No, from a balance sheet and cash flow, I think it's well, I mean, yeah, maybe too short to see because they only IPO'd not long ago, right? So whatever you see today is because of the contributions from IPO anyways.
But nonetheless, kudos have to be given for being so good ever since IPO. But there's still more to prove to retail investors so that it can justify the current share price and the current valuation. But before that, one very good thing to actually look into is to look at the shareholders. So for such a company, I would say, yeah, risky, dependent on one key customer, still newly IPO. At the end of the day, is the management in line or in sync with the shareholders' interest? Will the management work with the shareholders so that he can create value to shareholders and also himself? So I think one good thing that we can see is that the major shareholders are the directors. I think you look at here the breakdown. Mr. Tan Inki, I think indirectly he owns around 74% of the shares of Greatech. So it's a good sign. If Greatech shares were to go down, then there goes his net worth and also other things. He will do his very best, make sure that the company can grow leaps and bounds, pivot whatsoever, venture into new business instead of relying on the first solar to make the company actually go bigger and bigger lah. So at least he has he has much more to lose than you if you are a shareholder, because you will never have 74% of the company shares. You maybe only have 0.00%. And if the share price drop, he will definitely feel more pain than you are. Jumbing, anything you want to add?
I mean, I also quite new into investing. As in my investing journey is quite short. One thing I learned is a lot of time when these directors or the bosses, we call it the skin in the game. Usually you can put, as in, you don't need to worry because this guy have more risk than you, and then because most of their wealth is inside these companies. But something I learned also, if you talk about company like Carlsberg, all those things, how you can justify whether this company will continue to give you high dividends. If a company like Carlsberg, which is predominantly owned by a mother company in another country, for example, Carlsberg, I forget from which country. I think they own 51%.
Yeah,
and then it's a sign that you can get very high dividends because you need to pay back to the mother company. But you don't expect them to grow a lot because their interest is to serve the mother company. But for company like Greatech, few guys own the company, or in this case, one guy, similar to me, that we have shared last week. Also, I think that guy owned about 60%. So This is the thing that we don't need to worry. This guy will continue to drive the business. The next thing you need to see is about whether they are on the sunrise industry. Are they able to diversify their portfolio or not? This is the thing you should focus on. But then in terms of the effort to grow the company, you don't need to worry. So this guy must be more
stressed.
more stressed than you.
Yeah. So at least I think of all the business risks or whatsoever, at the end of the day, it's risky, but I think the directors actually feel the stress more than the retail shareholders. So it's a good thing. So as retail shareholders, our only job is to monitor the company. Every quarterly report comes out, spend some time to read it, and the annual report comes out, also spend some time to read it. And then after you read the latest one, you can also read back the old one and then compare what the director says. Is there a change of tone? Is there a change of company direction? Then you can automatically, you won't actually know the director very well, but it's the basic thing to do to actually get a sense of feeling that whether company directors are confident or not to grow the company. At the end of the day, as a shareholder, you don't run the company yourself. You are putting your faith in the management of the company to make the company grow leaps and bounds lah. So next, we talk about the prospects of Greatech. Noted that Greatech is currently very heavily reliant on solar energy, but there is silver lining on how the company might venture into other categories to further fuel their growth ever since the IPO. Chumbing, also something quite related to energies and electricity and also solar as well. You would like to take this on up?
I think another prospect they come straight into Greatech is I would say proxy of a proxy, because in some of the analyst reports or some you can find it from the annual reports is they become a qualified supplier to a US-based company involved in solar energy system. Then I think, wow, cannot relate lah. Then the next thing you see, this company was acquired by the largest US-based electric vehicles manufacturers. Then in one glance you think, it should be from Tesla lah. If the whole fact is true, meaning they are a proxy to Tesla indirectly, because Tesla own this company. I think should be called Solar City, right?
Yeah, Solar City.
And then they are a qualified supplier to it. I'm not sure whether a lot of people jump into this bandwagon because of this, other than the core business they are in. But we also quite excited when we see this thing. Then we zoom into it, how much they manage to supply to this so-called company owned by Tesla. I think it's very, very small. So whenever there are any news associated to a company saying they are tied to a certain thing that it seems like will have a very huge growth, you better go and check the contribution of the revenue historically, or is this is the first year that they get connected. But of course, not too bad lah. Besides this, they also have another company that they link to, which is Panasonic, also trying to be the company to manufacture EV battery to supply to all the players. And what comfort me a little bit is when I read the R&D's breakdowns, because in the IPO document they mentioned some of the fund will go into R&Ds. One of the big allocation is going into the production line system, which is the mother of all machines. They are trying to enter into this industry called the EV battery industry lah. So which is something I would say, after they reaping so much from the solar industry, which is from First Solar, they try to reap from the other industry really, which is leveraging on what they do best. Everyone just do one machine. They do 10 machines and connect them all together. So they're trying to enter this industry, and they literally allocate money to it. But of course, it's not big lah. They allocate most of it into working capitals, but at least I think there are few millions is going into this production line system for EV battery industry. So these are some of the things that I found out, which I think not too bad. Greatech trying to find their area after, as in, they're trying to find some other area after solar.
Mm-hmm. So yeah, I think this is the R&D expenditure that you were talking about. So it's actually very comforting to see that money is also spent into doing research and development. And if you look at here, solar wafer, that is IPO proceeds that they use to do R&D for solar wafers, and they also do it for the assembly of battery modules and packs. And if you were to look at the breakdown, 2.3 million, which is more than 50% of 5 million, goes into battery modules. So the company spends more money into researching battery modules for their EV future pivot, rather than other segments, which is a plus point to see how the management actually spends their money. So I think silver lining is not bad. Once you have your silver lining, you have your prospect. Eventually, investing is never about 100% win. There's always a risk associated to it. Jumbing, wrap up the risk part of Greatech before we take some Q&A questions.
Yeah, but when I do this slide, right, when I reach this slide, then literally I didn't change anything. It's the same 4 components that we put for me company that we shared last week. Same thing. I think this one got worse. Me is heavily relying on the few guys, but then this is very relying on one guy and one industry. The same thing is because this guy, even though some of the plant from Vietnam or whatnot, they still settle the thing in USD, which make them exposed to this foreign forex
Impact.
impact lah. And then lastly, it's all about the same things. They don't have long-term contract and so on. But one thing that differentiate between Greatech and me, I would say is even though they don't have long-term contract, but because they build all these machines, and you can see it's an uptrend in their revenue breakdown. The provisions of the parts, maintenance services, all those things, the percentage is much higher if compared to me. So this is something encouraging, but then it cannot compete with me until he find more big clients, because now only got one client. Intellectual property, I wouldn't share much because one thing I doesn't like about these companies, when I zoom into their annual reports, it's like some articles that anyone have very surface understanding of the industry also can come up with the annual reports. No industry insights. I don't know what they do. Besides the image that they say they do auto labeling, whatever machine inside this solar factory. They didn't explain what is it. It's not like me that they go into so deep is what is their wafer how
level.
the chips and all those things. This is
Yeah.
so high level. That's why we put this company at the only happening this week is because when we go and read, it's like we didn't get any insights. Besides all the financial data, of course, there's something that we can find out. But in terms of what they do, I think it's somewhat a black box because beside the few images that they share, they have a few images on the machines, not even videos, just the machines. And then also it's a zoom in kind of photo. You don't know what they did on. And they just tell you they do automation. But of course, they managed to win the contract. I'm not sure why they didn't want to share this, but this is something I doesn't like about the annual reports of this company.
Okay. Sean, what are your thoughts or opinions when it comes to companies that have heavy client concentration and does not have a recurring or predictive revenue stream?
No, I think from the start already, I was a bit concerned that if a company has 98% revenue from one customer, that becomes tricky. But if there are plans, of course, to expand into different areas, then that's a different story. But for this instance, it seems that they're pretty much going to be stuck in the photovoltaics industry in the near term. Yeah, so that is a concern.
So yeah, I think that quite wrap up the so-called impression that we have about what a company like Greatech does, what's the business model, what value does it create and offers to its client, and how does it earn money, and how strong its services and value proposition will determine how much money they earn. So apparently, if you look at the profit margin, it's juicy, 20+% net profit margin means that they are very good at what they're doing. They can charge their customers a high amount of money and then make 20+% or even close to 30% kind of profit margin. So, but of course, doesn't mean that it will be a repetitive and recurring business. Just like me, Technovision, it relies heavily on the company's sales personnel going hunting for new customers. And if they fail to find new customers to support their growth story, then definitely the risk would be the next revenue will be impacted. And if the revenue is impacted, definitely the share price will also be impacted as well. So should we do Q&A first or should we go to valuation first?
Do Q&A first.
Okay.
Yeah.
So how many questions we have today?
Not much. I think this guy, Hong, already share EV batteries. And then this must be either investor of this company or have great interest into solar energy or batteries related companies. You are right. EV battery is one of the proxy for this company growth story. And then
Yep.
we should have this some of the opinion shared by Kyung Po. Maybe
Yep.
the working capital is more to cover the cash flow. Payment from client based on product performance. It could be true, but
Yep.
warranty period and so on. I think another perspective is beside the collection from the client, it can be from the supplier as well. It can be because this industry is so niche, then the supplier give a very tough payment terms, meaning you need to pay 50% first before you can get the thing to build your machine. So it could be one of the reasons beside difficult collection from the buyers.
Yep.
You want to cover this, Japan or Sean?
To be honest, I don't know.
How about comparing to peer?
I don't know.
Yeah, I think it'll be quite tough to find out who Greatech's peer in if you want to zoom particularly into the automation, machinery, production, basically solely focus on solar. But if you do know, let us know. Hit us in the comments what is the so-called peer that you think is in the apple-to-apple comparison to a company like Greatech. We'll take a look, and if it's interesting enough, we might even feature it on the upcoming episodes. So yeah, let us know which is the peer that you're talking about, or you'll definitely look into it. We can move on. Next is solar cell sunset industry in energy. China has been producing cheaply solar cells and is accused of dumping by US. I think solar cells has been existing for quite some time. I remember solar energy is not a new thing. Even back then when I was in school, studying solar, I mean, people will attach solar panels on their roof for personal house usage. And even now, it has become bigger in the sense that people will attach more solar panels and then they sell back their electricity to the grid provider. And that's how they
Hello? Japan is gone, is it?
Yeah, I think it's stuck now.
Okay, I think I'll take over from this lah. But for regarding this question, I think I wouldn't say it's a sunset industry if you see the global contribution to solar cell manufacturing. It has been going up. But of course, you are right to a certain extent that China used to be very gung-ho into this industry. They have a few big solar cell manufacturing companies. But then there was a few companies that got shut down due to whatever financial issues. I forget those names. Because when I was in uni time, I used to make a trip to China because of some research trip. I go into some exhibition that have a lot of solar companies. So unfortunately, some of the few guys, I think as of today, they have already shut down or whatnot. But what I'm trying to say here is from an absolute volume perspective, they are going up. But for China, whether they are focusing on it or not, it depends. But because of all these global warming, all those stuff, you're definitely picking up slowly. And then one key thing you need to understand is, which lead into the next question is, Greatech supporting First Solar, And First Solar is very much into thin film when you talk about the technologies, while majority of the companies in China or the rest of the world, they are using the crystallized structures, which mean I would say they have a very little, close to zero competitor in my opinion for Greatech. But another perspective is maybe they can only serve First Solar, which is some of the problem that you might see lah. But then First Solar try very hard to make them special. They are claiming they have some patented technology that can improve the efficiency of thin film. Because thin film is very, very cheap if compared to the rest. It can go for massive deployment and is suitable for US because US got so many lands, so many deserts, and so on. So it's still a strategic play for these two guys. But then if you talk about solar industry in general, I don't think it's going down. Although there's some fact that China did have some big solar companies shut down in the past few years, but it will eventually pick up. It's just different company that take over the position to come out or to take over the market share. This is what I think. Yeah.
Yep. So yeah, I think just to round up, yes, China definitely has cheap solar, but if one day petroleum oil were to run out, I think the only energy source that can save us is solar. And it's just how we want to make solar energy more affordable and more highly efficient. So yeah, I think that's it for the questions. If you do have any other questions, please keep the questions coming. We will zoom back to the valuation part of Greatech, and let's see how much this company is worth as of today's closing price.
Yeah, let me share that. Wait for a while. Yeah. Do you want to cover this?
Okay, so if you look as of today, I think the share price of Greatech has been coming down. When we started to discuss and to look in the company, was just 6 ringgit plus. But of course, today market came down a lot. I think today it's just 5 ringgit plus ish. But even at 5 ringgit plus a share, PE ratio is at 54 times. And ROE, yeah, impressive. It's 28.95%. Little to no debt, high profit margin, juicy margins. Of course, for a company that is so highly performing, you do not look at the NTA. Basically, the NTA majority is the plants, the hard assets, the tangible assets. If you look at it, it doesn't make sense. Just 37 cents per share, and you buy based on for the assets, price to book ratio is 15.7. So basically, I think the focus should hinges back on the PE part, and of course, the company is still highly growing. It won't pay you out any dividends. I will definitely have questions if a company like Greatech or me or even revenue were to pay out high dividends, because they are in a very highly competitive business where they need to spend the earnings as research and development so that they can improve in terms of technological aspects and also business offerings. So definitely not a company to buy for dividends. You would want to buy it for its growth potential. But ultimately, if the company were to continue growth, it cannot keep on relying on First Solar. No company continues to grow just relying on one customer. It has to find more customers. It has to find more revenue streams rather than just be solely dependent on solar panels only. Of course, prospect is there. It will definitely go into EV, but as shareholders or EV investors, you might want to monitor the upcoming few quarters to see what is the progress, is whether the potential clients are coming in or not. So I think that's about it. Maybe Chun Bing, you have any points of view you want to say for company, the business, like Greatech and the valuation as of today?
I don't have anything to add, but I would say one of the sad part is Malaysia so-called good technology companies that is having very high PE ratio. Most of them having this problem where they rely on a few big guys, be it content, me, or even today's company, Greatech. They are just not on the upstream. They maybe mid to low stream. And for all these guys that can enjoy up to 50 to 60 kind of PE, I think it's quite dangerous lah, in my opinion. But of course, we used to share revenue and so on. Revenue seems to be more predictable compared to all this, which I think if you are someone looking for growth, but then don't want to have a lot of, how to say, don't want to have shock from quarter to quarter, maybe a company like Revenue JuJuR is something that you want to go with. But of course, they might not have the jump in terms of a growth revenue or whatnot in the few quarters. It will just slowly or steadily go up. I think this is something that just not even Malaysia, maybe the ASEAN region also share the same pain. Only giant company in US or China can have impressive control into certain industry and then become so big in creating those ecosystems that they can get so high margin and is still in recurring mode lah. So super impressive. But then Malaysia, I would say these companies are all impressive, good company, good management. It's just they are not into the recurring game, which I don't think justified to the PE they are in now, unless you compare to PE to growth. If the past few quarter or few years it has been proving themselves, then okay lah. But then from the business model perspective, with this PE, I think it's a bit dangerous, in my opinion.
Yep. Yeah, I echo your points and sentiments. Sean, any last top up opinions about company called Greatech?
Yeah, the profitability ROE looks great. That's on a very, very high side. But for PE, as what you guys said, 50 plus is high. And 2018 to 2019, instead of a growth, they actually slowed down by about 2%. So yeah, if you compare PE to growth, it's actually also extremely high. So yeah, I think it's a bit expensive now.
Yep. Okay, I think we have one last question from Kelvin. So Kelvin is saying wind energy. Actually, this is a very good suggestion. But Kelvin, if you really follow how humans around the world make energy, you'll notice that wind energy is predominantly not around the regions of the not in the so-called Katulistiwa area. So because we are located in the equator central or equator region, we get more sunlight to generate or to harness the power of Mother Nature to generate electric. We rely on sunlight a lot, which is why parts of America, which is near to the equator, it will be the most logical part to deploy solar panels and to harness sunlight as electric and convert it into electric. Wind energy is more suitable for countries located a little bit higher, a little bit more north than the equator. Countries like Taiwan or in the European regions, I think countries like England, UK, and also Scotland, they have wind farms. So if you want wind energy, you need to build your wind turrets or your wind turbines at an area where you can capture the wind flow when the wind and the weather change from hot in the northern hemisphere, cold in the northern hemisphere. Then you have the wind pressure, and this wind usually travel across the ocean and not through the land. So energy is quite niche, only for countries in a colder or where they have a climate that changes, so that you have a different air pressure to actually take advantage of the wind energy to generate electric lah. So I think that's about it. Thank you for your questions. Some of these questions actually trigger us to think deeper also and to give you all our insights and opinions. We hope you enjoy today's company. Definitely a difficult one, but I think as a team we go together, we study, and then we also do our due diligence and we share with you guys. And we hope you enjoy today's company. Of course, today's company is not going to be the last. And if you have missed out the previous companies, you can check back. They are always on our Facebook, also on our YouTube. If you want to look at the numbers more clearly, I suggest you to visit our previous videos in our YouTube. Watch it on a large screen, and then you can look clearly at the numbers. And let us know what companies you want to cover next week. We will definitely look through the comment section, do our due diligence, and share with you guys next week's company. So I think that's about it. Thank you for tuning in. As always, see you next week, 9 p.m. every Thursday. See you. Bye-bye.
Bye.
Thanks.